Good afternoon, ladies and gentlemen. This is Stephen Paternak, your host of Mortgage Matters, and we are back. Took a bit of a hiatus. Things have just been very, very, very hectic on my end here. Wanted to bring this back. We're going into the the later parts of the year. We're now in June, so only 6 months left in the year. And I wanted to bring this back because there's so much uncertainty around what's going on in the real estate markets. A report came out recently stating that there was, for the first time in a very, very long time, there was more homes on the market than there were buyers. And a lot of people were calling me, texting me, asking me, what does this mean? And that's exactly why I wanted to bring back this show, because I wanted to start making sure that I'm communicating with people that I may not speak to on the phone, maybe people who don't have my cell phone number, whatever the case may be. So we are back here. This is episode 28, and I am going to bring my co-host on right about now. Michael Plata.
What's going on?
How are you, my friend?
Doing fabulous.
Yeah. Good to see you, man.
Good to see you too. I see
you've got some big shoes to fill, as we've spoken before. I want to just, before, as we get started, send a quick shout out and well wishes to our good friend, Mr. Christian Babcock.
Absolutely. He's a legend. He's my mentor. He's his leadership is, it's missed.
Yes, sorely. But you are doing a phenomenal job, Mike, I got to say. And, I think I've said this before, but your most endearing quality, you have many, but the most endearing quality, and the reason why one of the main reasons why I enjoy referring you and working with you is for the communication. I mean, Sunday, 8 o'clock at night, Monday, 6 o'clock in the morning, Tuesday, 3 o'clock in the afternoon. I can always count on getting a reply from you and getting, at least some sort of response. So I appreciate that. And I'm sure the rest of your clients do as well.
Thank you for noticing.
Yeah, it's important, man. My dad used to say the first rule of business is just be there.
That's it.
You might not have the answer. You might not know what to do, but at least if you're responding and you're communicating, people will feel heard.
Yeah. And there's been studies that, that when you send a customer to a vendor, right? And sometimes there are agents that have sent 3 different loan officers, but the first one that's going to pick up is 70% chance that the customer is going to end up using.
Yep. It's called speed to lead.
Yeah, there you go.
I do a lot of online advertising, and every single time when somebody puts a request in to show a property or to get some information, I try to get back to them. I mean, the studies you're in reference to, I've heard plenty of them as well, where if you wait just 5 minutes, the chances drop down by 40 or 50%. And if you wait until the next day, your chances drop down to 20%. So why would you want to do that?
Drastically. Right. You're absolutely right. And then we also have to have boundaries, right? We have to have time for our family and so we make time for that. But as well, at any time that a realtor's calling me with a lead, or even a text, I jump on it right away.
Yeah. The balance and the boundaries, while I wholeheartedly agree with that, I also do agree that there are periods in your life and in your business where you have to just kind of go, as hard as you possibly can. And you know what? Throw the boundaries, throw the balances out the window. I know I'm in one of those phases right now. And the goal is to get to a point where the balance is actually the other direction, where 90% of my time is actually spent on a beach.
That's right.
And to get there, I've got to go really unbalanced these days. And I know, Jen, my beautiful fiance, doesn't necessarily agree with me on this, but as long as I'm in alignment with her and I do make the time, but I hear what you're saying. Yes.
Yeah, and as we grow this business, we start delegating certain responsibilities to our team where they could pick up where we were doing everything, right? And
Yep.
we'd have a little more time for ourselves.
Yep.
But yeah,
Yep. Yep.
I
All
get it.
right, let's get right into it. So
Yeah.
I'm gonna first start by putting your contact information across the bottom. I've
Awesome.
got your email there, and I've got your cell phone number. So as you're giving off this wisdom, people could reach out to you directly. And please, anybody who reaches out to Mike, please make sure that you saw him on the Mortgage Matters podcast. It goes a long way.
Yeah, it does. It does. People
Uh,
love it.
what's going on in mortgage news? I could tell you what's happening on my side and what I'm hearing. Rates are now really at that 7 number, and people are getting scared.
Rates have been flat for the last 2 weeks, closer to 7%. And a lot depends on credit scores and programs and things like that. But for the most part, yeah, they've been inching and touching 7%. There hasn't been much movement. Some reports have come out, like this morning, the unemployment report came out, a little better than expected, but almost what they were estimating. So there wasn't much going on in the bond market that moved the rates either way. And prior to these 2 weeks, rates started climbing from your low sixes all the way up to 7%, where it's at now. People are feeling that. Some buyers want to just kind of hold off and see what ends up happening in the next 6 months of the year. And others want to keep moving forward and find a home. They know how important it is to get in now and not wait later on. The old saying, marry the house, date the rate. They'll deal with lowering their payments when rates come down. But it's interesting times.
So there are different products. So they are around the 7s right now, rates.
Close,
Correct?
yeah, close. And we, to be fair, we could get to certain programs down to the low sixes. With either a first-time home buyer or somebody putting 20% down. We have programs that could lower that rate. But on average, your conventional mortgage is almost 7%.
If you had to guess, or just kind of ballpark, I mean, you're probably looking at credit scores all day, every
Yeah,
day, right?
right.
Are
Yeah.
you seeing primarily people with better credit scores, lower credit scores, mid-tier credit scores? Where do you really see those numbers coming in at?
On average, I see credit scores in the 700s, in the mid 700s, right?
Okay.
So which is really good scores.
Yeah. Yeah.
So that tremendously helps out the rates. But yeah, that's what I'm seeing, and that definitely helps you out tremendously to qualify for many different loan programs. Less risk of a loan when those credit scores are in the 700s, right? Now, when you start getting into the 600s, things get a little dicey.
Yeah. It from the way you've explained it to me and Christian has explained it to me in the past is like, when you get below that 700 number and you've got a 6 in front of it, a lot of your options are kind of taken away from you, and you're kind of, I don't want to say forced because nobody's forced to do anything, but
Right.
you're kind of cornered into only being able to pick certain types of loans. Is that correct?
That is correct. And to give you the best rate possible for that type of scenario, that you have a credit score with showing a 6 in front. Yeah, your programs are limited, and we're always looking to see which program is going to give you the lowest mortgage payment associated with the rate. So it does close the door on a lot of options for sure.
And it's my experience that people who tend to have scores in like those mid 600s, it could go down very fast and go up very fast if you just make a couple of smart decisions, right?
Right.
Like, if you're seeing that you have, whatever, a credit card with maybe, a couple $1,000s to
Yeah.
pay off, but you're holding money back to be able to put down on a down payment, it might be smart to kind of pay that credit card off, boost your score up, and then maybe it'll help you, qualify for something that you might not need such a large down payment, right?
Absolutely. I mean, for me, I think credit is the number one component in trying to get any type of borrowing, credit card, auto loan, especially even mortgage. So you definitely want to focus on increasing your credit score as much as possible, and then and keeping it there, and then down the road going back to your savings, however you did it, to complete your down payment and your closing costs.
It's funny. I tell people all the time that, like, you could be the nicest person in the world. You could be Mother Teresa for
Right.
all I care. But if you don't have good credit, they don't look at everything else. Like, that 3-digit number literally defines who you are on paper.
Yeah.
To the entire world, to credit bureaus, to getting a car, to renting an apartment,
Yeah.
to being able to do anything.
It's critical here in the United States. I come from immigrant parents, so they've already adapted to the way United States are. But anyways, when they were younger, everything was cash. Like some other folks out there, everything is cash, right? So they don't realize how important it is here in the United States to build credit and have very good credit. That way, you're able to borrow from the bank whatever it is you need. Housing, car, credit card,
everything.
Yeah, everything. Right.
And I'm a huge advocate of, like, credit repair companies, as long as you vet them and you're making sure, like, the way they operate and the way that they're able to remove negative remarks from your credit reports. I think it's phenomenal. I mean, they're sending out 5, 6, 7, 8, 9, 10 letters a month to these credit bureaus. And I think the way it works is that the credit bureaus have to respond within a certain amount of time. And if they don't and they miss it, then at that point, they lose their right to keep that on your credit score.
That's right. Yeah, it's 30 days that the credit bureaus have to respond within 30 days. If not, then by law, they have to remove that blemish or that delinquency, whatever it is that's going on.
You wonder why they even care about keeping it there. It's like, what are you holding a grudge for? Right? Like, I missed one 30-day payment with Discover 3 years ago, and they're still keeping it on my credit report. Like, what do you care, Discover? I've been good all this time. That one thing, and that's driving down my credit score.
Yeah. It's just a robotic type of approach that it's not a common sense approach. It's just, policy, and this is what we got to follow, which doesn't make a lot of sense to me either.
Yeah.
But, talking about credit, just if you have excellent credit for many years and you end up having one late payment by accident, let's just say, your score could actually go down by 100 points at times.
Yeah.
So that's how important it is to pay on time, even if it's the minimum payment.
Yep.
But you never want to miss a payment. And they give you a 30-day lapse. So in other words, if your due date is, call it today, June 6th, and you don't pay, you really have 30 days to still not be marked late to the credit bureaus, but you would have to more than likely pay a late fee to the creditors. Yep. But you definitely don't want to go 30 days beyond your due date.
I remember when they and you're probably in the same ballpark as me. Do you remember when they first started doing, like, auto pay?
Oh yeah.
Oh my God, yeah. What a godsend that was.
Right. For
For
those that can't keep up, right, you just put in your auto payment and not worry about it.
Oh my Lord, what a godsend that was.
And for those that are not tech savvy, they tried to set up auto pay and it didn't go through, and and then we have a bunch of explanations and going back to the credit restoration company to try to help.
Yeah. I wanted to talk to you. I was talking to a client the other day, and they had mentioned that they had a reverse mortgage. Okay. How well versed are you with reverse mortgages?
Pretty well. I mean, we do them often. I mean, we have an expert in our company that she runs a reverse mortgage department. I mean, we do them very well.
How if you had to give your opinion on the reverse mortgages, because I get a lot of mixed reviews on this thing. I mean, you got some people that are huge advocates of them, and then you have some people that say that they are completely predatory. So, like, what do you think? Where do you think they lie? I mean, me personally, I always think that, like, you can't judge one bad apple can't spoil the lot, right? Like, if it didn't work for one person, maybe there's some amazing success stories on the other side of that. So kind of, what do you think?
I think it really just comes down to the situation of the homeowner, right? You got to be 62 years old to be eligible for a reverse mortgage. But look at it in a way that you've paid this house for many years. It might be free and clear, and now you're on a fixed income and you need extra income to continue living your life. And this might be your only means, right? And it is tax free. You're not paying a mortgage forward as we're all used to paying. Now it's coming back to you as a payment to help you subsidize, on your fixed income to for your living expenses. You know, for others, maybe you don't need it, but they take advantage of it, and all of a sudden now the heirs have to deal with paying off the balance after you pass away, right? So that's where it could get a little complicated. So I think every situation is different. It just really depends of what's your goal in the reverse mortgage.
Wouldn't it make more sense for somebody to just tap into like a HELOC or like a line of credit against their equity?
If they qualify, if you're on a fixed income, the income may not be enough for you to qualify for that home equity line of credit doing a debt to income ratio calculation. So this may be your only source to try to increase your overall income on a monthly basis.
Interesting. So if you have Bob, who is bringing in only maybe $2,000 a month, and he wants to borrow, he'd be limited by that debt to income level. So he couldn't take out a $700,000 mortgage, even though he has $2 million worth of equity, because his income wouldn't be able to sustain paying the mortgage.
That's right. Exactly. So once again, this may be the only way of, borrow money out of your equity to keep living your life the way, whichever way it is that you have to pay your expenses.
Interesting.
Right?
All right. So switching gears just a little bit, you started telling me about some new products that you have. I think it was DSCR loans, right?
Right. So we just actually released our own DSCR product. It's a loan
debt service credit.
Almost debt service coverage ratio.
Coverage ratio.
All there you go.
Coverage ratio. There it is. All right.
Yeah. So some of the particulars are that it's got to be an investment property, right? Okay. You could do 80% loan to value on a single family house, 75% loan to value on a multifamily house.
Okay.
Rates are pretty fair.
Okay, so wait, let me just go back to the LTVs. You said it was 75% on a multi.
Right.
And on a single, it was how much?
80%.
80%. All right. And I'm sorry, I cut you off, but the rates are where?
The rates could be in the sevens. It's actually not so bad for putting 20% down, not verifying your income. And as long as the rents wash the mortgage, you qualify.
All right. So as always, I'm thinking in my mind how I could try to use this mortgage. All right. Single family house, $600,000. Taxes are about $10K a year. We're talking putting down 20% on a single, right?
Okay.
So we're putting down 120,000.
Right.
So your mortgage is 480.
Yeah. Okay.
So 480. What's the payment on that?
Estimated payment is $4,300.
$4,300
with taxes and insurance.
Now I have to be able to rent the house for $4,300.
That's right.
How do I prove that?
Well, it's either if you're purchasing the house with tenants, appraisal company is going to use the tenants, whatever the lease is with the tenants that they're paying. Or if the house is being delivered vacant, then they're going to go by whatever the market rents that the appraiser is noting in their report.
Gotcha. So if it's a 4-bedroom, 2-bathroom, backyard, maybe a garage, like I think that in Yonkers, it would pass for a 43. I think $4,300 would pencil out.
I mean, with the way rents are today, or even on Section 8, I agree with you. And this is something that we'll end up looking into before going into contracts to make sure the rents are there.
And comparables. All right. So closing costs on this mortgage. So I need $120 for down payment. Closing costs. I have to pay mortgage recording tax, right?
Right.
I've got to pay for an attorney. I've got to pay for an appraisal. So I'm into it for what, about 3% of the purchase price, about 18,000 or so.
Yeah, about 3%. To be safe, I would say 4%.
Okay,
Right.
so
That'll
about
put you around
25,000.
24,000.
Okay.
Right. Right. So you're all in at 145,000.
Okay.
Right. Don't forget, you're also going to need at least 3 months of mortgage reserves.
So yeah, but 3 months of reserves is another 15,000.
It's about 13,000. Yeah. So, all in, you're going to probably need about 160,000, 165,000.
This sounds like a really good product.
It's a great product, especially if you're a business owner or if you're one that, you get paid in a certain way that you cannot prove income to pay the mortgage, and you're buying an investment property. This is an easy way, or an easy source to get a mortgage in. And once again, I think you're getting a fair rate, especially where rates are today.
And is there a minimum? What's the minimum credit score to qualify?
It's well, if we're talking about 80% loan to value, 740.
740. Okay.
Right.
And what about the other one, the multi?
Same thing,
Oh, okay.
740. Oh yeah, but you could go down with a credit score as low as 660 on this product, as long as you put down at least 30%.
So, okay. So single family house, 30% down.
Mm-hmm.
Single family house, 30% down at 600 is $180 down. And you can go with a 660 credit score.
Yeah.
Cash is always king, man. If you got
It's like credit. It just opens up a lot of options.
Do you guys what about if I told you, and again, this is not my situation, I'm just saying, if somebody came to me and said, hey, can you get me a loan? I got a full Bitcoin in crypto. Have you guys come across that yet?
No, and there's certain policies and guidelines on crypto. I honestly, I would have to get back to you, because the question you just posed, have I come across it? I have not. So, and like every scenario, doing this for 24 years, every loan comes with a story.
Yeah.
And, you just learn, you just become experienced to every example.
Because I would imagine that, listen, if I did have, a couple Bitcoins sitting
Right.
there in my crypto wallet,
Right.
I would guess, I imagine I'd probably just have to cash those out and then use the dollars.
I imagine so, and once again, I would have to get back to you on.
Yeah,
on
I'd
that.
like for you to
Right.
do a little bit of
Absolutely.
research on this one. I stumped them.
Right, now you stumped me. And we could do another Mortgage Matters on crypto and mortgages.
Yeah, I'm very curious. I'm sure Loan Depot has an expert somewhere in their wheelhouse that can help us with this.
Oh, I'm sure we do. Yeah.
Where do you find deals getting killed the most? Do you find it before the process even gets started, or after the process? Like once, maybe appraisal, maybe something happens with the borrower, their financial situation. Where do you see it most?
Well, where do I see it the most? And it really depends on the type of property. For example, if we're talking about a co-op, it could happen afterwards, right? Right. There's certain, even though we may have lent into the co-op building a couple of months ago, and then we need an updated co-op questionnaire, something may have changed. That now that co-op project is ineligible. But other than that, if we're talking about just getting a mortgage on a condo or residential home, I mean, the loan officer should do their due diligence as far as verifying that credit, income, and assets. The only thing that we don't have control over is appraisal and title issues. And title typically does not get ordered until the loan is approved and the buyer's attorney has a copy of the commitment letter, right? So at that point is where we'll find out if there's any title issues or not. As far as appraisal issues, I mean, if the listing agent has done their job and and they have comps to support where they arrive to that selling price, then we should not have an issue. But then again, we're dealing in a market that a lot of these properties being sold over asking. Mm-hmm. So now as a loan officer, you have to start reading your contracts to see what are the mortgage contingencies and
Yeah.
how big is that down payment in case there is a shortage in the appraisal
Yeah.
value.
Yeah. Yeah. A lot of realtors, a lot of the realtors that I speak to, especially, the newer agents, they don't realize how important it is to understand the contracts
Yeah.
and how important it is to try to maintain, I don't want to use the word control, but like stay in the driver's seat and just understand what's going on, because you could send a memo of sale that you and another agent have worked out, that the buyer and the buyer and seller are in agreement on. You send it to two attorneys, and then all of a sudden something comes back and you're not even aware of it.
Right, right. You're blindsided, right? So, and that's why it's very important to work with a team that you trust, attorneys that you have a lot of experience and close a couple of deals together, right? Because that attorney, more than likely, that's representing the buyer, is going to contact you, going to contact me, and say, "Hey, Mike, the mortgage contingency clause says this.
Yeah.
And we may run into this worst case scenario. Do we have something to resolve it? Before giving a deposit and signing contracts."
Yep. You may or may not, this may or may not fall in your wheelhouse, but the difference between the appraisal contingency and the mortgage contingency is a very, very thin line, right?
Mhm. Right, right.
So like if you don't have the appraisal contingency also added, then that might not protect somebody under their mortgage contingency.
That's right. It's as if you're buying a house all cash.
Yep.
You No matter what happens with that appraisal, you still you got to move forward and close.
Or lose your deposit.
Lose your deposit. Right.
It's such an interesting line that
Oh,
you have to toe. I'm sorry, what are you gonna say?
no, I was gonna say, I was just thinking about this. The only out you may have is potentially title issues, since that may fall under the mortgage contingency clause. But
Because they
once
can't
again,
deliver clean title.
right, right.
Here's another thing that I get, right? So and I'm just thinking about this right now. There's so many people who don't know even what we're talking about when it comes to the appraisal contingency, the mortgage contingency, so on and so forth. But title issues and how important title is a whole other bag of, like it's just, there's so many different things that I feel like people are not educated on. And, this is something that me and Christian talked about so many times. Just make sure
Yeah.
you're dealing with people that know the ins and outs and can explain this process to you and have experience with these sort of issues.
And to your point, that's why it's very important to deal with a local lender. You're
Yes.
dealing with a lender that knows the Westchester counties, the municipalities, the attorneys,
Yep.
the realtors, right? Also the lower Westchester areas, the Bronx. But if you're dealing with a lender that is in some other state, the New York real estate market is completely different from the rest of the world.
Mm-hmm. Mm-hmm. Deal with a lender that has access to the underwriting team.
That's also a huge one.
I hope you take the underwriting team out to lunch every once in a while.
I have to. They need something. They want something. What is it that you want? I'm on my knees. I'm there to deliver. Yeah.
Oh man. All right, Mike, I'm going to start wrapping up this episode. I have your info on the bottom. Plata at loandepot.com, 646-772-9461. That is accurate, correct?
That is accurate. That is perfect.
Wonderful. Wonderful. So thank you so much for joining us this week. And I'll be in touch so we can get this back on the schedule, man.
Great. It was great catching up with you, Steve. Thank you.
Take care, Mike.
All right.